Alright guys, very warm welcome to another week ahead video. Now our focus for this week will once again be fixated on the ongoing Brexit saga that we have playing out right now. There will be a couple of other events to watch. We have EU flash PMIs coming up on Monday. We've got Fed minutes on Wednesday. Also have the overall themes in the market like virus developments to watch, fiscal support in Washington, and obviously the current transfer of power issue going on in US domestic politics right now. However, on the Brexit front, things are definitely starting to move in the right direction. The upside, overall medium-term upside bias for the pound has continued in this past week. We had some episodic moves lower, driven by some negative comments hitting the wires and also some episodic upside moves that we had in the US dollar, but the overall trajectory remains to the upside. Now, there was a great opportunity on the 19th to take advantage of that overall upside bias when we had that overreaction in the market when the pound sold off as news hit the wires that a EU negotiator had tested positive for COVID. Now, lots of downside quickly on the back of that news, which was an overreaction, because if you think about it, nothing about that announcement has really changed anything about the ongoing negotiations. And what we did is we took an entry as the market slammed right into that 132 psychological level. We took a long entry, buy entry, and rode that out for a couple of pips to the upside, about a 30 pip move. Just a quick short buy entry on that news. Great example of how you can use that overall fundamental upside bias for something to take advantage of some short-term moves that you feel is an overreaction in the market to basically take advantage of. Now, taking a look at the options market, everything isn't exactly smooth sailing, even though that overall upside bias is still intact. If we take a look at the options market, even though we have seen a continuation of that downside move in the 1 month and the 3 month implied volatilities, we have actually seen the 1 month and 3 month risk reversals moving lower as well. And that shows that the volatility of puts were greater than the volatility of similar calls. And that means that downside protection got more expensive in this past week. So this might just be due to us heading deeper and deeper into crunch time, but it might also be a prelude to a possible increase in implied vols if we see talks further dragged out and the can kick down the road even further towards December, and could mean sensitivity, or more sensitivity rather, to incoming negative news about Brexit. So definitely a key one for us to watch is that risk reversals as well as the implied vols going into this next week. Now, talking then about the week ahead, we had some EU members coming out like France, Belgium and Netherlands calling on the bloc to basically step up their no-deal preparations because they felt that the UK hadn't compromised enough yet to try and get a deal across the table. Now, the pound, if we take a look at that chart, did see some additional downside coming in on the back of that, but it was also driven, like we said, by some episodic strength that we had in the US dollar, bouncing from a key multi-year support area. And even though we had that downside, the overall path for sterling does still remain higher as long as trade talks continue. Now, according to some negotiators, the legal text on all the topics, barring of course the main three ones, which is fisheries, state aid and dispute mechanism, apart from those three, the legal text for all the others have basically already been completed, and even some sections on the highly problematic state aid issue as well. Now, apart from that, we also heard that France, who were very opposed against the EU not having the same type of access to fishing waters, they've basically come to the party, they've eased their hardline stance, and they basically realized and accepted that any new deal won't include the same type of access, will include more reduced access to UK fishing waters. The one caveat to all the progress, though, is that both the UK and EU Parliament still need to ratify any agreement that the two sides might reach. Now, I think the chances of a deal being vetoed in any parliament should be low right now, as the political consequences can really be damaging. I mean, think about it this way. No politician wants to be remembered as the one who were responsible for rejecting a deal that was available on the table and willfully causing massive disruptions to the economy. So in that sense, I think any deal that can be reached will be passed or should be passed in parliaments. And we also had these recent trade deals, right, between the UK and Japan and Canada being announced, and it shows that quick agreements definitely are possible, and it might give PM Johnson some additional support at home and some backing that he needs to get some compromises across the table. Now, that doesn't mean that all is well and a deal is guaranteed. Of course, there are some major caveats still in play, like the three main issues. We still do need compromises from either side on things like fisheries, state aid and that dispute mechanism. And over the weekend, we had some negative news where Chief Negotiator Barnier threw a curveball by basically saying that they want fishing quotas to only be reviewed once every 10 years, and that is a very big ask since the UK has actually wanted annual negotiations for fisheries like that of Norway. So these last minute add-ons are really not very encouraging, and it is something that we do need to keep in mind as a potential risk. Now, according to a Bloomberg article over the weekend, if PM Johnson can find a compromise on state aid, he should be able to clinch a deal this week. And according to Express News in the UK, there were some civil servants in Whitehall. They are now preparing legislation in order for a deal to be passed through Commons and the House of Lords as quickly as possible. So yes, to a degree, this week might just be another same theme, different week coming up, but the anticipation for a deal has arguably never been higher right now. And the progress and recent comments does allude to the possibility of a breakthrough in the next coming days. So looking at some possible sentiment shifts, very similar to what we had last week, guys. Scenario 1, we're looking for concrete breakthroughs on contentious issues. In this scenario, we're looking for concrete breakthroughs on those three key topics like fisheries, state aid, and dispute mechanism. Now, the market right now is arguably coiled for some good news. But like we mentioned last week, make sure to look for solid and concrete breakthroughs for the highest probability as well as most sustainable price reactions. Now, if we do get some solid breakthroughs in that scenario, we would expect to see the pound seeing upside across the board, and secondly, upside for the FTSE 100 equity index as well. Now, do take note, like we mentioned last week as well, during the 2019 withdrawal agreement, we of course had a massive one-way move to the upside in the pound as the possibility for deals started to come in. And the biggest reason for that was because there was a massive net short position that was built in the pound, a huge risk premium. And as that started to unwind, that basically exacerbated the move to the upside. Now, this time around, we don't have that. So even though we are seeing upside for the pound on breakthroughs, it might be more limited compared to what we saw going back to 2019. Scenario 2 is either side officially ending and walking away from trade talks. Now, in this scenario, again, we're looking for concrete announcements like this. We're not looking for political posturing comments saying that, yes, but, this side has actually already walked away like we had from the UK a while back. We're looking for either side coming out saying that, we don't think a deal is possible anymore. We're not going to waste our time. We are officially walking away. Now, again, like 2019, compared to what we had now, back in 2019, we had a huge 5% risk premium built into the pound. This time around, we have it the opposite around, right? So there's no risk premium built in, which means that if we do see trade talks completely collapse, that's going to open up a lot more room to the downside for the pound compared to an upside case if we get a breakthrough. So do keep that in mind. Now, if any of the two sides do decide to walk away, in that scenario, we would expect to see an outsized and exacerbated downside for the pound across the board, and downside for the FTSE 100 as well. Now, coming back to the FTSE, one thing like we mentioned last week as well to keep in mind is that even though we would expect the FTSE 100 to move lower, it is very sensitive to strong moves in the pound, because remember that 71% of revenues from FTSE 100 companies are generated outside the UK and normally dollar denominated. So if we see a massive move lower in the pound dollar on the back of that scenario, it can actually support the FTSE 100 just like it did back in 2016 when the pound plummeted and supported the FTSE 100 higher. So do keep that in mind as a potential caveat for the FTSE 100 in case we do see a massive disappointment with talks collapsing.